Well, hi guys, good morning and welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. The Wednesday morning setup is looking pretty good, given the fact that global cues are pretty strong. We saw, Wall Street resume its up move ahead of the Fed's decision on interest rates that's due later today. GIFT Nifty also hinting at a start above that 21,900 mark. You've got Asian markets also trading in fine fettle. So the setup looks fairly positive, but yesterday was a day of sell-off when we, breached that 21,800 level as well on the downside on an intraday basis. We'll be talking about all the cues for trade with our guests on the show. We'll also be discussing, specific stocks, all your stock-related queries as well will be taken up with the technical expert on our show today. So if you have any queries, keep them coming in on our live feed on YouTube. We will try and take them up. But before we move any further, let's take a look at the top headlines at this hour. Wall Street rises ahead of the US Fed rate decision later tonight. The central bank is expected to keep rates unchanged, but concerns of rates remaining higher for longer also rise as inflation remains persistent. Asia, meanwhile, trades higher with GIFT Nifty hinting at a positive start around that 21,900 mark. Oil prices are perched at multi-month highs. Brent trades above $87 a barrel on worries over Russian supplies as Ukraine sets up attacks on Russian oil infrastructure. Gold, meanwhile, loses some shine as dollar firms up and Bitcoin as well retreats, below that $63,000 mark. Veteran investor Ramesh Damani says PSU stocks will continue to lift the market higher. Contrary to concerns about a market bubble, he believes there is no such scenario, emphasizing that although there may be occasional frothiness in the market, it always gets corrected. And among stocks in the spotlight, TCS bags a big deal from regional US bank to provide core tech support. Vodafone, meanwhile, will be in focus as ATC Telecom will convert 14,400 optionally convertible debentures into fully paid up equity shares for 1440 crore rupees. Well, let's then take a look at the trade setup. Given the fact that yesterday was a day of sell-off, the Nifty spot ended just about that, above that 21,800 mark, but we had breached below that level, in intraday trade, and we saw a 240-point cut on the index. In fact, the index has dropped to a one-month low. Nifty broke below that 50-day exponential moving average that's placed at 21,865. And when I speak to technical experts, they say that 21,900 has now become the resistance for the index from support. Sensex, meanwhile, we all know that it has turned negative for the year. It has erased all the gains for 2024. And among the top contributors on the Nifty on the downside were Reliance Industries as well as TCS. Mid and small caps continue to underperform the benchmarks. Both the mid and small cap indices ended lower by about 1.2% or thereabouts. The VIX also shot up once again, nearly 2% uptick there. And if you look at the FNOQs, the Nifty open interest shed 5.9%. In fact, was down 5.9%, shedding 7.5 lakh shares. The March futures were trading at a premium of 69 points vis-a-vis a 80-point premium. And if you look at the Nifty Bank open interest, that was up 0.6%, adding 12,450 shares. A Nifty Bank, it has managed to hold on to that 46,000 level on the downside. Although we saw an 8th straight day of selling for the Nifty Bank index. We'll have to see whether or not we see some bit of uptick in the Nifty Bank index today or not. And if you look at the put call ratio, that has dropped to 0.73 versus 0.95. In FNO band today, BHEL, Biocon, Hindustan Copper, Piramal Enterprises, RBL Bank, SAIL, Z as well as Balrampur Chini, they continue to be in the ban, in the FNO ban. And new addition in the FNO ban is Industars. On the flip side, you have Aditya Birla Fashion as well as Manappuram Finance, Tata Chemicals as well as Nalco. All these stocks have exited or are out of the FNO ban. Looking at the fund flow picture, foreign investors pumped in somewhere around 1,400 crore worth of shares in the cash market. Day before yesterday, they were sellers, but yesterday we saw some bit of buying coming in from FIIs. Even the DIIs, domestic institutional investors, bought shares worth 7,400 crore rupees in the cash market. So all in all, that is the setup for trade. And if you look at some of the stocks that will be in focus, Bharti Airtel, given the fact that its arm Bharti Hexacom has got SEBI nod to float an IPO. Also, Vodafone, as I mentioned, will be in focus as ATC will be converting optionally convertible debentures into equity. So that stock will be in focus, and Shakti Pumps will also be in focus, given the fact that it has got the board approval to launch a QIP to raise 200 crore rupees. But without any delay, let me bring on board our technical expert for today. Joining me is Rajesh Palviya of Axis Securities. Great to have you on the show as always, Rajesh. 21,900 seems to have become, seems to now be the resistance level for the Nifty, right, from the support level. So for today, as we know, GIFT Nifty hinting at a positive start. Do you expect that we could make a dash at that 21,900 level today?
Good morning, Nandita. Yeah, so definitely 21,900 is likely to act as a major supply zone, as the major put-based concentration was at 22,000, 21,900 for first half of this series. But in previous day, we have seen that Nifty broken those support area of put-based concentration. So that is clearly giving us there is a clear short built-up kind of setup is already playing out for Nifty. So still shorts are there in the system, and we believe that if he continues to hold below 21,900, then possible down move can extend further. And once we trades below 21,800, then possible down move can extend towards 21,750 to 21,700. That's the next support area based on the put based concentration. Though we are in oversold trajectory for near term setup, put call ratio is also hinting up that there could be some pullback action, but still, the structure, if you look at the broader market, that is turned on the bearish side. Most of the stocks now slip below to 50-day moving average. Most of the sectoral index are also under pressure, and Nifty also slip below to 50-day moving average. So that all adding up the bearishness on the near-term structure. So at this moment, 21,900 is the key level on the higher side until the Nifty not able to recover above those level. Sell on rise would be the strategy. Yes, about 21,900, there could be some short covering we can see, but again, it will be a mild short covering. The major short covering will play out only about 22,000 level on the Nifty spot. So it would be again, range bound kind of activity for market. 22,000 would be the higher band, and on the downside, 21,700 is the lower band for the Nifty for some couple of trading session. So to play this down move, 21,800 put option one can look to buy, which was closed at around 91, 92 rupees. If you get opportunity to buy this put option around 80, 85 kind of zone, you can buy with stop loss of 50 rupees and keep target around 130 to 140 for this put option. On the Bank Nifty, again, Bank Nifty also slipped below to 46,500. So that's again, negative structure for the Bank Nifty. Short built up was there in previous session also. So if Bank Nifty continues to trade below 46,500 on spot, then possible down move can extend towards 46,000 or 45,700. So that's the again a bearish setup for Bank Nifty also.
Right. Before I introduce my next guest, I want to quickly ask you your recommendations for today, Rajesh.
So Bharti Airtel is buy. That stock is trading at all-time high trajectory, very stable structure, buying interest still there. So we expect Bharti Airtel can continue its up move towards 1260, 1270 kind of zone. Keep your stop loss at around 1195. The stocks where we feel that bearishness we can see in the today's session, that is Siemens stock has given a breakdown to its 20-day moving average, and short built up was there in previous session. Stock is now trading below to their important support area on the daily as well as on the weekly chart. So we expect furthermore weakness we can see in today's session also for Siemens. One can look to go short in this stock with stop loss of 4,700. Downside, we are projecting target towards 4580 to 4560 for Siemens.
Bharti Airtel and Siemens, those are the two stock recommendations. With that, hold that thought, Rajesh. We'll come back and talk about more stocks with you. But let me also bring on board Siddhartha Khemka, who's the head of retail research, broking and distribution at Motilal Oswal Financial Services. Great to have you on the show, Sid. Of course, the all-important Fed decision, that's what we are waiting for today. Do you expect some bit of caution to, remain today? And although the setup is looking fairly positive, do you think we will be fairly volatile? And Bank of Japan has also, doled out a policy shift, right? They've hiked rates for the first time in 17 years. How do you think, the read-through will be in the market of all these central bank actions? And what is the messaging that you would be watching out for from the US Federal Reserve chairperson?
Yeah, very good morning, Nandita. Glad to be on the show. So, if you look at the global macros right now, the narrative for the current calendar year was that interest rates cut would come, and that would help provide the growth impetus that was required. Now, we had before the start of the year, there was expectation that there could be some hopes of rate cut as early as March, but that faded away, and we shifted it to June. The latest set of macro data that has come in, that has been coming in specifically talking about US, the inflation numbers, the jobs data, the economic growth numbers, they all point to a fact that the Fed might push the rate cut further down the line and not do a rate cut in June. So the probability has come down from 80% to 60%. The dot plots, what they say that from a 5 rate cuts to now a 2 to 3 rate cuts in the current calendar year. So how does it impact is that if the rate cut was to provide the kind of liquidity, the growth impetus, and if that were to be delayed, and any commentary regarding that clarity from the current Fed meet will create volatility in the market.
Right, right. So just hold that thought. We'll come back to you. We've had the markets open up in the green. Some bit of green on the screen looks pretty good this morning. We've seen the Nifty is above that 21,850 mark. Just about that 20-day EMA level. And if you look at the broader end of the markets, even mid and small caps are doing fairly well. Right now, they seem to be outperforming the benchmarks. So mid-cap index up by nearly 0.5%. Even if you look at the small-cap index, that's also showing some bit of strength. The Nifty Bank index also opening around that 46,500 mark. So that's a good sign. Let's pull up some of the other sectors that didn't do all that well yesterday. IT pack. I want to see how that is doing today. Given the fact that we've seen incessant selling coming in on the IT pack over the last few sessions. Today, of course, some bit of green here as well. 0.6% uptick there. FMCG, okay, metals also showing strength. And let's see what the FMCG pack is doing. That was also among the top laggards yesterday. Flattish, however, it is in the positive zone. Pharma is the other one that will come up on your screen, yeah, 0.3%. So yeah, the texture of the market looks on the positive side this morning. Of course, notwithstanding the fact that we had global cues also looking fairly positive ahead of the Fed meet. Auto seems to be showing exceptional strength, among the other sectors. So 1% kind of gains coming in there. Aside of that, let's take a look at some of the gainers and losers. Auto pack clearly leading from the front, given the fact that Eicher Motors is up nearly 6% today. And BPCL, that saw some deep cuts yesterday. In fact, it has been on a downward spiral over the last 3 sessions on the back of the fuel price cut. But today, some bit of buying emerging. In fact, it is one of the top Nifty gainers. Maruti, Tata Steel, JSW Steel, so metals as well holding up, and some of the technology names seem to be limping back, the likes of Wipro, HCL Tech, all of these stocks in the positive zone, and so are two-wheelers like Bajaj Auto, Ultratech Cement as well in the positive zone. On the losing end, you have Grasim, you have HDFC Life. Some of the FMCG names continue to feature on the losing list, on the list of losers. Britannia, Hindustan, Unilever. Mind you, HUL had slipped to a 52-week low yesterday, and today as well continues to be in the red. Bharti Airtel also in the red, and so is ICICI Bank. But let's go back to Sid then. Siddhartha, I want to ask you about TCS. Of course, yesterday there was this stake sale by parent, right? 0.6% stake was sold via block deal. And then yesterday post-market, there was news that it has bagged a big deal from a US central bank. But what does, the promoter stake sale convey to you? Do you think it's just a part of a debt reduction exercise, or do you think it kind of shows that there is more stress to come in IT shares going forward? How would you read into that, this particular development?
So, Nandita, clearly there is no direct correlation between the promoter selling stake and the outlook on the company. This is purely treasury operations that the promoter entity is doing to reduce debt on its own book. And we have heard a number of stories now how Tata Sons need to do an IPO and how they can avoid that IPO by paying off that debt and getting reclassified through RBI. So clearly there is no linkages. Coming to the view on IT, I think the results were better than expectation. There was a very somber expectation and they delivered better than that. The good part is that order book or order deal wins have been pretty strong despite the not that good demand environment in the current or in the near term. So that gives a very positive outlook for a long term. But as I said, near term things could remain subdued for 1 or 2 more quarters. Having said that, TCS is by far the largest, most diversified IT company, and we have a very positive view there. We believe that market leadership for TCS would continue in terms of the product offerings, in terms of newer technology offerings that they would keep bringing in, and the strongest order book that they have. So overall, we have a very positive view from a long-term perspective. I think next 1 or 2 quarters there could remain some volatility in the stock price based on the results that they announce and the commentaries with regards to demand, especially given that the Fed rate cut is also now likely to be delayed beyond June.
Right, hold that thought. I want to get in Rajesh and talk about an Eicher Motors. It's a top Nifty gainer. Rajesh, the stock is up 5.5%. It's still, some time away from its 52-week high. Do you think, do you see any kind of reversal on charts? Because I think this stock has been coming under selling pressure of late.
Yeah, so on near-term chart, yes, there is a reversal as the stock was moving in down-sloping channel, and in this gap-up opening, stock now managed to give breakout of its falling trend line. So looking at the near-term structure, yes, there is a reversal. Now stock is trading about to 20-day, 50-day moving average. So I think some more long side positions can attract for this reversal pattern. And we believe that till stock is now holding about 3880 kind of zone, then possible upside target we can see towards 2960, 2970. So I think yes, one can look to buy this stock as a strong reversal is taking place on the near term structure.
Right. Sid, I want to talk to you about the FMCG pack. We've seen incessant selling and underperformance when it comes to the FMCG pack, right? But one would argue that valuations may have turned attractive now. It's a high PE sector, right? Stocks in the FMCG sector have high PEs. But, on the one hand, volumes have been struggling. There has been patchy rural rebound. But on the other hand, premiumization theme seems to be doing very well. So right now, after the sell-off, do you think, FMCG warrants a look? Do you think the stocks are giving good entry points? What are your thoughts?
Yeah, Nandita. So you rightly highlighted there has been concerns mainly on the rural side where the demand is not yet picking up, and it's the premiumization or the premium segment which has been doing well so far. Some of the stocks I would say that given that the upcoming elections is there could be some more time when the rural recovery happens. So I think yes, valuations have come down, but you need to be very selective. For example, within the FMCG pack, what we like is a Tata Consumer. There is more premiumization play in Tata Consumer. Another stock within the broader consumption theme that we like is Varun Beverages. Again, given the fact that summer is coming, plus their products have been doing quite well. If you look at they have been able to launch some of the products which has done well. They have approached a multi-pronged strategy to sustain growth, enhance their manufacturing capacity, as well as now they are going for geographical expansion beyond India. They have done some acquisitions in the African region, which gives a good leg up to the future growth potential. So I would say that be selective. Things would take time to recover, and we prefer Tata Consumer and Varun Beverages within the FMCG pack.
All right, Tata Consumer and Varun Beverage is looking good, with the view on premiumization and how it's doing. But I want to talk about LIC as well. It had been a year of milestones for LIC, right? Given the fact that, we've seen the stock cross the IPO price in January, February, it hit a market cap milestone as well. But off late, it has come under selling pressure, and now there is further, front-running issues that is, come to the fore. SEBI has, of course, agreed or confirmed this development, and the company has also responded saying that they have taken stringent action. But do you think for now the up move that we saw is over and the stock will remain under pressure? What are your thoughts?
So, Nandita, I think the stock price movement was backed by fundamentals. The company clearly demonstrated the growth and in an environment where we were seeing margin pressure across insurance names, LIC was the only one with a sustained margins in this environment. So that kind of was liked by the market, and hence the stock price started moving up. What we believe is that LIC would continue to do well on back of the new product launches that they are doing. They are also looking at some products which will give them a highly profitable, so because of which we are seeing a good margin. So protection, they focus on non-participating and the savings annuity products. These are helping them. Plus, market share is something that they have been now protecting well. So overall, we continue to like LIC, but within the insurance space, life insurance space, our preferred pecking order would be SBI Life Insurance, which is much better placed to face some of the regulatory challenges that may also come up. The operating efficiencies are much better. But nonetheless, as I said, we like LIC as well, and we have a target of 1270, which gives a good decent upside from current levels.
I know we spoke about IT stocks, but what about engineering research and development companies like Cyient, even Tata Tech for that matter? Just reading a report from Investec, and they have mentioned that growth is relatively stronger for some of these ER&D companies vis-a-vis IT companies. Within this pack, which stocks do you prefer?
Yeah, so I think ERD has been delivering within the Indian companies. These are tier 2 players, but they have been delivering growth quarter after quarter. And that's a space that has not witnessed that kind of slowdown in the discretionary spends that the US companies are looking at. So that has helped. And within that, we definitely like Cyient. We have a target of 2,400. That would be our preferred pick. We also like LTTS, that is L&T Technologies, wherein we have a buy rating. Persistent, we have a neutral rating. We believe that while the growth is there, the valuations are a bit on the higher side, but nonetheless, all these three stocks would definitely show higher growth. So preference goes to Cyient and LTTS.
All right. With that, Siddhartha, would like to thank you for taking out time and joining in this morning and sharing your thoughts with us. Look forward to interacting with you sometime soon. Well, with that, let's go back to Rajesh, who's been waiting by very patiently. Rajesh, I want to first get in your thoughts on a Shakti pump. The stock is under pressure today, but it has done fairly well over the last 5 sessions. And even on a 6-month basis, it has done, well to, see gains of somewhere around 56% or thereabouts. Although over the last 1 month, I think it did come under some bit of selling pressure. But what are the levels you're watching out for here, given the fact that the stock is in the spotlight?
So long-term structure for Shakti Pump is on the bullish side. There was some corrective move since last couple of week, but again in the previous week there is a reversal kind of formation. Again, we have witnessed there is a dozy kind of formation on weekly chart, and again follow buying is taking place. So looking at the reversal on the near-term structure, we believe that if it's a hold now about 1300, 1320 kind of zone for closing basis, then possible pullback action we can see in coming weeks, and possibly again stock will start its upward journey towards a 1450 1500 kind of zone. So overall structure is bullish. Buy on dip should be your strategy. 1250 should be your positional stop loss to buy and accumulate this stock.
All right, that's the view on a Shakti pump. But let's also pull up the charts of a Vodafone Idea. The stock is in focus as ATC will convert optionally convertible debentures into shares worth 1440 crore rupees. In fact, the stock, if you see the weekly charts, I want to just see how the stock has done on a weekly basis. 13 levels is where it's trading at right now. But do you expect the stock to retest levels of 16 or thereabouts anytime soon? What are your thoughts on Vodafone? I know that Bharti is one of your picks. But when it comes to this particular chart, how are you positioned?
So this is the 4th week where we are seeing that stock is facing supply pressure. Stock is now trading near to its critical support area of 12.90 or 13 kind of level. That's the crucial level for the stock at this moment. If at all stocks manages to hold around 12.90 level on a closing basis, then some pullback action we can see in the stock towards 14 or 14 and a half. That's the important level to watch for in the near term basis. If stock crosses above 14.5, then yes, there could be some short covering action we can witness in the stock price, and then possibly we can see target towards 1550 or 16 kind of zone also. But at this moment, 12.90, 12.80, that's the crucial level where stock is exactly trading at current level. So one needs to wait and watch at this moment whether the stock able to absorb all this supply pressure around these level and manage to close above those level. Then only one can look to buy with very small stop loss of 12.50.
All right, 12.50, that's the stop loss for Vodafone. But let's take up some queries that are trickling in from our viewers. First up, the query on Bharat Electronics coming in from two people, Yogesh Kumar and Amit Gupta. PSU stocks have, been witnessing selling pressure on and off. Today, we are seeing some bit of, flattish action when it comes to the stock price of Bharat Electronics. But how, does the stock really give you an entry point at this level? Or do you think wait for someone, do you think somebody should wait for more correction before getting in?
So after a very strong rally since last couple of months, this is the first month where we are seeing, stock has shown some significant profit taking. In this process, now stock is slipped below to 50-day moving average. So near-term structure has turned on the bearish side, but long-term structure is still intact on the bullish side. Those who wants to look for, medium-term to long-term investment perspective, they can use this decline as a buying opportunity in the stock, as overall structure is on the bullish side. So in this decline, yes, buy and accumulate would be the strategy for investment perspective. Your stop loss to buy and accumulate would be around 170. That's the important level for positional trade or investment perspective. On the higher side, the major supply zone at this moment is placed at around 195 to 200 zone. Until the stock not crosses about 200, there would be pressure for some more time. Once stock crosses about 200, yes, there would be short covering action, and then possibly stock can scale up to the next target towards 220 to 230 kind of zone, and maybe stock may resume its upward trajectory again, and then we can see further higher level on the longer term basis. So for long term perspective, investment perspective, yes, our advice would be to buy and accumulate this stock.
All right, buy and accumulate. But what about Paras defense? We have Vignesh writing in and he wants to know your views on Paras defense for accumulation at current level for a target of 850. What would you advise him?
Stock is in downtrend, and now stock slipped below to all its short-term moving averages, long-term moving averages. Stock is now approaching to its multiple support area of 600. That's the important level for this decline. So if at all stock manages to hold above 600 and some, then one can look to buy and accumulate the stock, as we have seen very significant profit taking in the stock, and now stock is approaching towards its major support area of 600. So that's the important level to watch for. So I think around 600 one should review it. If it's able to hold those levels, then some pullback action we could see in the stock prices. But again, 850 is again very far from the current level. In between, there is a major challenging level, or you can say supply level, that is placed at around 700, 720. That needs to be crossed. Then only we can project a target towards 800 to 850. But at this moment, 700, 720 are likely to act as a supply zone for any pullback action in the near term as well as the short term basis.
All right, those are the levels you should keep in mind. I hope that answers your query. But the next query is coming in from Rakesh, and he wants to know whether Hindalco warrants a fresh entry at the current level. This stock has seen positive traction. Even if you see the 5-day chart or a monthly chart, it has given, it has traded with positive bias. So, would you advise him to enter at current levels?
So since last 3-4 weeks, stock is consolidating and trying to form a base around these level. Looking at the short to medium term perspective, stock is still trading below to its 50-day moving average. So that's the major supply zone at this moment. On the higher side, 540, 550 is the major supply zone for the stock. If at all stock crosses above 550 level, then yes, there would be a reversal kind of formation, and then maybe we can see a good traction on the higher side towards 580, 600 kind of zone. But at this moment, looking at the near-term, short-term structure, we believe that some more consolidation we can see in the prices. Range for consolidation would be around 540 to 510. That's the range where we see that some more consolidation is likely to be there. If you wish to buy and accumulate this stock for short to medium term perspective, yes, you can use this consolidation as an opportunity. Keep your stop loss at around 500, and possibly once the stock crosses above 540, yes, you can hold on your position or you can add further more position. Then we can expect target towards 570 to 580.
All right, that's a view on Hindalco, but we have a query coming in on a TCS as well from Yagnesh. Of course, we saw sharp sell-off yesterday. Today, it has limped back and is holding above that 4,000 level for now. But Yagnesh has 20 shares at the rate of 3350 per share. He's still making some profits. Would you advise him to take some money off the table, or would you ask him to or advise him to hold?
I think he should hold as overall long-term structure is bullish. The stock just slipped from its all-time high trajectory because of this stake sell news. Though stock is now trading below to 20-day, 50-day moving average, but overall structure is on the bullish side. So we believe that once this supply pressure settle down, I think again stock will attract the buying action, and then we may see again stock to regain its all-time high trajectory going forward. So if he wish to hold this stock for a medium term to long term perspective, he can hold on. Our target on the higher side for long term perspective is around 4,400 to 4,500 for TCS. So buy on dip is our strategy for TCS. We are projecting this target to in the coming months. So one can look to buy this stock or hold on this stock. Those who are already holding it, keep your stop loss at around 3,800.
All right, hope that answers your query. He's advising you to hold on to it. But I also saw a query on Birlasoft on our feed from the midcap IT space. Now, this stock has been in consolidation mode as well, right? Last 1 month, we've seen 10% being shaved off. Do you expect this downtrend to continue here on? And would you advise traders to look at this for a trading opportunity?
So this is the fifth consecutive week where stock is forming lower high-low formation. That clearly shows some sustained supply pressure or sustained profit taking is happening in the stock prices. In this process, stock slipped below to 20-day, 50-day moving average. Even the negative crossover for this moving average is already there. So I think some more supply pressure we can see in Birlasoft, as we have already seen very strong rally in last year. I think some corrective move is likely to be there in the stock prices. So I think those who wants to buy the stock can wait for a further dip towards 680, 660. That's the important level on the downside for this corrective move. So I think another 5-6% kind of correction would give you again opportunity to buy and accumulate this stock in the decline. So our advice would be to wait for further more correction to buy and accumulate Birlasoft.
All right, that's the view then on Birlasoft. But last query really for the day, it's coming in from Satya CK and he wants to know your thoughts on Allied Digital Services. 135 is where it's at right now, somewhere in the middle between 52-week low and 52-week high. But, hasn't seen much of, an uptick. In fact, it has been in a downtrend over the last 1 month. Here, what should one watch out for?
So I think most of the mid-cap stocks are under pressure. Like digital is also under pressure. If you look at the overall structure, stock is now trading near to its important support area of 125. That's the important support area at this moment. If stock slips below to 125, then there would be again, supply pressure is likely to be there, and then possibly down move we can see towards 110 and 105 on the downside. So at this moment, 125 needs to keep as a stop loss. On the higher side, once stock manages to cross above 145 zone, then possibly stock can scale up to the next target towards 160, 65 also on the higher side. But keep a stop loss of 125 as mid cap is under pressure, and most of the mid caps are, witnessing major profit taking in this fall. So 125 needs to keep as a strict stop loss.
All right, that's the view on Allied Digital. But with that, we've reached the end of the query segment. And of course, we've also reached the end of the show. Rajesh, thanks a lot for taking out time and joining in and sharing your thoughts with us this morning. Wish you a very happy trading day.
Thank you.
Well, markets in fine fettle as we end the show. 72,200 is where the Sensex is at. Nifty is up somewhere around 50 points. We'll have to see whether it can really reclaim that 21,900 mark, given the fact that there's the all-important Fed decision later tonight. So there could be some bit of volatility. Mid caps have already come off their opening highs. They've largely turned flat and in fact just about to slip into the red. But although the advance decline ratio is tilted in favor of gainers at this current juncture. Well, with that completely timed out on this edition of Opening Bell, from me and the entire team, thanks a lot for tuning in. Keep following us on our social media handles, and of course, if you have any comments, leave them in the comment section below. From me and the team, thanks a lot for tuning in. But stay tuned to Money Control for all your other news and updates.